Welcome to the True Wealth Podcast, where we specialize in helping aspiring homeowners break into the real estate market and help investors create and build wealth through real estate. We will be sharing some of our best advice around real estate so you can purchase your first home or grow your real estate portfolio, increase profitability, reduce taxes, and achieve financial freedom. Your host, Sean Adeyemi, is a certified financial planner, mortgage professional, and fellow investor. We want to help you get real so you can pursue your investing dreams with confidence. A real estate acquisition lifestyle is within your grasp. Financial freedom is possible when you have the right mindset, coaching, advice, and community. So, let's get real.
Welcome to the True Wealth Podcast. I'm your host, Sean Adeyemi. It's been a while we've recorded an episode. Life's happened. A lot's changed over the last couple of years. And we're going to be changing our focus a little bit, talking about a lot about real estate and real estate investing. Our goal is to bring as much value to you, the investor looking to buy real estate, either as a first-time home buyer or as an investor looking to buy a rental property, investment property. We're going to be here to give you all the tips, the tricks, and as much information as we can to help you make the best decisions. And for this, I've brought my friend on, award-winning realtor, Othniel Litchmore, to join us for our conversation. So, Othniel, how you doing today?
I'm doing good, man. I'm doing good. Thanks for having me. This has been a long time coming. We've been trying to put this together, so I'm glad we could make it happen. I'm excited to talk about, building wealth through real estate, I guess. And pre-construction, I know it's one of the topics we want to talk about, so I'm excited. A lot happening in that space right now, so let's see where we go with this.
Yeah, let's talk about it. So pre-construction real estate is one of those conversations I've wanted to have for a long time because I think it has its pros and its cons, right? It has, for me, it's helped me because I've used it to acquire properties at a discounted value before the property is actually done. But there are also downsides to it. So an article came out just about a week or two ago on Global Mail talking about pre-construction real estate and giving examples of how people have been burnt with pre-construction real estate. So I want to talk about how to make it work for you, right? What are the pros? What are the cons? And how does an investor go into a pre-construction deal or opportunity? How do they make the best of it? We've seen what's happened to the real estate market the last few years. One of the things I've been warning a lot of my investors and a lot of clients about is that the real estate market does not always go up. There are going to be bumps. It is not that indifferent from the stock market, where you're going to have some good years and you're going to have years where things are not as great. But I think in Toronto and the GTA, to be exact, we've been spoiled with multiple double-digit increases year over year. And so that has gotten a lot of people excited that, well, if I buy this property, it's going to be worth X amount in 6 months, X amount in 2 years. And so what this article is talking about really is that people bought pre-construction projects maybe a year, 2 years ago, and we all know what happened in 2022. A lot of property values have gone down, especially in the core GTA. And so people have the properties that they're closing on are not as valuable as they were when they first bought it. And so so we have people who purchase properties for what did this guy say here? He purchased a property for $900,000 and he's having a hard time even reselling it for $810,000. That's a big $100,000 difference.
Right.
And so my take is I love pre-construction real estate, but I think for any investor going into look at a contract, a couple of things you got to look at is one, research a developer, right? We've seen a lot of developers go belly under in the last few years. Fortress Real is one of those very common ones that people got into these projects, and Fortress Real unfortunately could not complete their projects and people lost money. So one of the things I always say is look into the developer and research how many projects have they completed, look at their balance sheet, understand what their track record is, because if you don't have a strong enough developer, that can come back and bite you. And we're going to talk about that a little bit later. But researching developer is one of the key ways to know that is this a good deal or not. Now, even minus this article, Othniel, what are your thoughts just generally? What are you seeing in people who purchased pre-construction a year ago? What have you seen that has changed? Are you helping your clients purchase pre-construction real estate? And what are the metrics you're looking at when you're helping clients?
In pre-construction. Yeah, I mean, to be quite honest, I haven't spent a lot of time in the pre-construction space, but on the back end, I've met clients that have approached me with possible assignments. They'd like to offload it. Just things aren't turning out the way they had initially planned when they signed up for the pre-construction, and that's been my experience with it on the back end. So I know in the past a lot of people have made quite a bit of money buying pre-construction, waiting time. I think the condos are no. I've seen freehold as well, where someone bought a freehold in 2017 when the market was sort of at its lower point, and then they were able to take possession of that unit in 2020, 2021, and in many cases they doubled
Right.
the equity just based on that 4-year window, that 2-year window. And so in many cases it's just the nature of the market when they purchased it and what the market looks like when they take possession. On the other hand, I've met someone who purchased pre-construction just at the beginning of the pandemic because rates were low and everything looked very positive. And when they are about to take possession in late 2022, early 2023, the value is just not there. They have a hard time qualifying for an affordable mortgage because the rates had gone up so much. So it's a mixed bag. And so, I think when the timelines are longer, I find that things sort of turn out, have a higher probability of turning out positive.
Right.
So if you're dealing with a 5-year time span, and maybe you can speak to this as far as what the average, how long it takes the average condo project to go from, sale to occupancy. I think, people that have that sort of 5-year window, it's pretty positive. But when you have like a 1 or 2 year turnaround, it's possible that there might not be enough equity at the end. So that's sort of my thing. I think people that got in and can have that time span, they're more likely to get a better outcome than people with a shorter timeline. I don't know what you think about that.
No, absolutely. I think one of the keys I always tell people is when you invest and think long term, because when you think long term and you plan long term, it gives you an ability to withstand short term challenges or short term fluctuations. So, but then that also has its downside. For instance, I've seen projects that are 4 years out and it's taken long, and in your case, that could be a good thing where even if the markets do come down, it gives it time for the markets to come back up a little bit and potentially still retain the original value they bought it for. But in some cases, I've seen that as the reverse, that the longer the project takes, a lot has changed financially for the buyer. Either their job is no longer as steady, they've taken mat leave, they've switched jobs. And when it comes to qualifying for the mortgage, some of the criteria that we used to initially qualify them on approval for that pre-construction no longer applies, right? And so sometimes you'll find clients who find it hard to close. For instance, a divorce happens between when they first purchased the pre-construction and when they're closing. And so before there was two incomes that were gonna qualify for this mortgage, and now there's only one income, right? So there are different things that can happen. One of the things I often recommend is, one, when you're buying these pre-constructions, is to make sure that you're talking to experts, not just somebody who wants to sell you, not just the realtor who's trying to sell you on this great pre-construction deal. You got to talk to people.
In the
or
case
the builder.
Yeah, you're typically
right?
dealing with the builder and an employee of the builder. And I think that's an important point, because you're not dealing with someone that is objective or is even on your side. They're going to tell you all the upsides and none of the downsides, right?
Right, exactly. You've got to take a look at your finances and the stability of your income to say, okay, if this project is going to be done in 2 years, if this project is going to be done in 3 years, well, how steady is my job? How long have I been at this job? How steady are my savings rate? Will I have enough to close? One of the things people often skip that I wanted to talk about as well is, so when you're putting in these offers, usually the builders will have you do a pre-approval. And what I'm finding is that, and the article even talked about this, is that people are getting all these fake pre-approvals just so they can qualify and the builder can sign off and yes, we have a deal. People are getting these fake pre-approvals that say, yes, you'll qualify for this mortgage. But behind the scenes, they're not really doing the due diligence is, can I really close this property? Do I have the means to not just put down a deposit, but actually close on the property? Because putting down the deposit is one thing. On the flip side of it, depending on if this is your primary residence or a rental property, you may need to put additional down payments. Do you have the additional down payment that you're going to be able to come up with at closing? Does your income support this purchase, or will it support the purchase in 2 years or 3 years or whatever that is? And so that's one of the things I often recommend is make sure you're using real numbers. You're not using made up numbers. You're not relying on just the information the builder is telling you or the builder's representative. Make sure you get independent advice, someone who does not have any skin in the game for you buying the property or not buying it.
Exactly.
So that's one of the things.
What do you think about like flipping though? Because there's a lot of people, I think their thought process is that I'm going to buy this condo, I'm going to put down the deposits, get that fake pre-approval, but I'm going to try to flip it before occupancy or flip it before completion, make a profit. I'm making out like a bandit. I never actually had to qualify to buy this property. What do you think about that?
Well, two things. One is make sure that you have the means. One, make sure you have an assignment clause. An assignment clause is big because sometimes people assume that they can assign it because that's what they've heard. Make sure the builder actually allows that. That's one. Two, make sure that you know what the window of assignment is, because the builder will have a window on. You can assign this property between 90 days, 6 months to 90 days prior to closing. Anything between 90 days and closing, you're not allowed to assign it. And so when people don't have those dates in their mind, they think, I'm just going to assign it. You may pull up your contract and realize, shoot, I've passed the date, so I cannot assign it. That's second. And third is there's this assumption that the property is going to be worth more than you purchased it for. And that's not always the case.
Yeah, that's true.
Right?
Yes, it is.
Because I do mortgages, I've seen people where I'm trying to get them a mortgage on this property, and we have to send out an appraisal to see what the value is. And the value of the property is coming in less than what they purchased it for. And so the lender is only going to lend based on what the value is. It doesn't matter what you think it's worth. It's what the market actually says it's worth, right? And so people are either having to put more down payments, or I've seen people actually lose their deposits. And in addition to that, not just lose the deposit, if the builder sells that property for less than your contract, they can come after you for the difference.
Yeah, I think that's what people don't realize. Like these things, like you're not going to game the system when it comes on to pre-construction. Like it is an investment. This is investing in its truest form, meaning that there's a lot of upsides and a lot of downsides, and you got to be careful. And you got to, like you said, get information, because like I said, I meet clients on the back end when they're thinking about assignment or trying to sell it before completion. And that's a lot harder than a lot of people realize that it is. There's not necessarily a market for this stuff in many cases. In many cases, the builder doesn't allow you to put it on your standard sale websites. Like you can't put it on the MLS, you can't put it here, you can't put it there. Because again, it's an investment. The builder wants to be able to hold the profits as much as they can. So there are certain restrictions that they'll put in place to ensure that, like, if anybody's going to get some profit, it's going to be them and not you. You're not going to be able to game the system. You're going to be able to outmaneuver the builders in many cases. And so it can be extremely difficult. And so people need to keep in mind, like, this is investing, definitely in its truest form, sometimes gambling in some respect. And so just to be mindful of these things, the potential for assignment and all that comes with that. And even capital gains and taxes that come
Right.
along with like the profits that you'll make by flipping this sort of pre-construction. It can be very complex and come with a lot of issues.
Yeah, and one of the things most buyers may not realize is that the builder doesn't want you competing with them, right? Most of these builders, they'll release maybe 50 units now, and they plan to release another 20 units right before closing. And so if you're planning to assign your property before closing, the builder doesn't want you competing with the price increases that they may have put on it. And so when they put that window, when they put that window there, you can't, just like you said, you can't put it on, one, you either can't even assign it at all, or two, you can't put it on the traditional sites where you can find buyers, where buyers can know this assignment sale is on, and the buyer wants to flip it. And so that limits the pool of sellers you could potentially have, because you're not, like you said, you're not putting it on MLS, you're not putting it on some of these common sites. You're going through word of mouth. You're asking your realtor to find out within his network, does he have a buyer that could potentially buy this? And so that's one thing investors need to be aware of, that is that, yes, you may not have to close the property because you can flip it, but remember that your pool of sellers is probably going to be smaller because you cannot put them on these traditional places where you want to sell it. So that's something to be mindful of. And another thing I always say when it comes to pre-construction is this: what builders have started doing in the last few years is they don't sell these projects to you based on the market value today. They sell it to you based on what their projected value is down the road. And so what they're trying to do is kind of put their hands in your pocket, really. They don't want you making all that profit. They want some of that profit coming back to them. And so they're going to give you inflated values. And so it's up to you to do your due diligence to make sure that, okay, does this value actually make sense? If I'm buying this property at $800,000, if similar properties on the market right now, resale, are selling for $800,000, does this $900,000 price that this guy's asking me for, is that reasonable in 2 years or in 3 years? Sometimes it's not. Let's face it.
Yeah, because like, I mean, all those people that were protesting earlier this year about what they bought their pre-constructions for and what they were worth today, they bought at a time when prices were escalating, right?
Right.
And they were sold this idea that, hey, if you don't buy this now, or rather, if you buy it now, it's going to appreciate till, if you buy it for 1.3 now, it's going to appreciate to 1.6 just based on the current rate at which homes were appreciating. And it turns out that was just a false premise, like, and not to say they were misled per se, but builders were preying on that premise, or playing on that premise rather, and buyers bought it. And so you had all these people that bought these pre-constructions at 1.6, 1.7, even $2 million, assuming prices would appreciate to that point, when in fact prices went in the opposite direction. So you got to be very careful, like you said, because the builders are selling at tomorrow's value. So you have to make sure that you're using the same you're coming from the same place, that you can also envision that appreciation, because the builders will do it and they'll give you all the evidence that it's happening, but you gotta be mindful of that and be cautious on your own. Yeah.
And you said something based on your premise, and even one of the things I even want to clarify on that is, sometimes we have inflated ideas, right? That's why we need to have professionals around us that can actually give us unbiased advices to say, okay, if we look at the year-over-year growth rate of properties in this neighborhood, this property, forget the last 2 years, or even the last 5 years, really. I say the last 5 years have been an anomaly where prices are going almost double. I know someone that bought a property for $600,000, and then a year later they sold that same property for 1.2. Wow. That is not normal. And don't get used to that. But people are getting used to that. And so you need to have people in your network who can look and say, okay, based on a 5% historical year-over-year growth, what is this property probably going to be worth in 2 years, in 3 years? You need to use realistic numbers. Don't look at what the market is saying. Look at what the historical averages are. I always say this, it's better to underestimate and come out way more profitable at the end of it than to overestimate and you don't have the money to close it, or you completely lose out your deposits. And like you said, this is a gamble. This is a risk. Sometimes it's worth it, but sometimes it's not, especially if you're buying your first property. This is all the down payment you have, and you're hoping that you can get into the real estate market with this project or with this property, and then you end up losing it. That could set you back 10 years. That could set you back a lot. And so I think our key takeaway is look at your numbers, right? Look at what the property is selling for right now, and look at what the timeline is on this pre-construction. I say have independent advice. I always say also look at what the current market value is. Sometimes you may find that, especially if the builder is overinflating what the purchase price is, you may find that you may be able to get something similar on the market right now for less than what the builder is selling it for. So that's something to be mindful of. Any other key takeaways?
I would say if you can, like there's this expression in investing, and Sean, you probably know this, like buy the dip.
Yeah.
Recognize when the market has taken a dip. And I would say over the last 6 months or so, the pre-construction market has taken a hit in terms of, and sellers or builders have been out there providing incentives for people to come in and purchase, because it's just a difficult sell at this point. And I would say that's actually a good sign. If you can come in and get in a bargain, get a deal in when the builders are desperate. You don't want to approach the builders when things are good and
there's lineups of people.
Exactly. Watch out for the lineups when the builder is begging you to come in. And again, it has to be a reputable builder and someone that you know is going to follow through with the promise. That's important. But if you see a reputable builder offering incentives and all these sort of things, try to get people in, that's probably a good sign that you're buying at a low point and that you'll be able to benefit from the appreciation in the future. So I would say, keep that in mind as you go out. And again, when you're buying a pre-construction, you're buying a piece of paper, you're buying a promise, you're not seeing what's in front of you. And so you have to be mindful of that like you are hoping that this promise will be fulfilled in the way that it's been outlined, that you're really just hoping. So I'll be mindful of that, as opposed to resale when you're seeing what you're buying and you can get familiar and comfortable with it. There's a whole different animal. So keep that in mind.
Yep. And that was a good takeaway. I hope this was helpful for any of our listeners. We're going to put a link to this article that we reference in the show notes so readers can read it. I think I think what we're both saying is we're not saying we're against it. We're not saying for it. We're just saying do your homework, right? Make sure that it's a good deal, and all the things we talked about, make sure you consider them so that you can make a profit, or at least you can close this home if it's your first home and be happy about your purchase. So that's all for today.
Don't get fooled. Like, don't get tricked into this is not easy money. Like, it's very fraught. And like I said, and I know we're wrapping up now, but a lot of people have made a lot of money over the years with this stuff. Don't just follow suit and think it's just automatic. It's a lot of complexities to it. Be mindful.
Yeah, have the right people around you. Othniel is a great realtor as well, and he can definitely shed some light if you need help. We're gonna have our contacts in the show notes. If you have questions, feel free to reach out to us. Othniel, how can our listeners reach out to you if they want to get in contact with you?
Well, they can Google me, on my website, my social media come up. I'm on Instagram, I'm on TikTok, Othniel Real Estate. And you can always message me at othniel@othniellichmore.com. OTHNEIL. That's Othniel. And just hit me up. I'm available. If you Google me, you message me on any platform, you'll hear from me.
Yes, and that's all for today. We will put Othniel's contact in the show notes. And hopefully this was helpful for all of you. Thank you for joining us today. This is the True Wealth Podcast.
This is all the time we have for today. Thanks for listening to the True Wealth Podcast. Don't forget to rate, share, and subscribe to the True Wealth Podcast on your favorite podcast platform. Follow us on Instagram, Twitter, or Facebook at True Wealth Pod. We'd love to hear from you. Share your thoughts, ideas, and questions with us on our social media platforms or email us at podcast@truewealthadvisors.ca. And who knows, your question might be the subject of a future episode.